Hi guys, this is Simon with ToughTrader.com and Trade and Perform Coaching. And I had a pretty big day today. And so I wanted to share that with y'all. I was asked by members in the room, and I thought it'd be a good idea to share with everybody how I set the trade up, right? So a couple things I want to mention before we get started, just the normal disclaimers that need to be said. Past performance is not indicative of future results. This is for educational purposes only. I'm sharing my trade plan with you in hopes that it'll make you a better trader. But don't follow me blindly, okay? Losing money is part of trading. I definitely lose money on trades. Make no mistake about it. I also make money on trades. Past performance is not indicative of future results. Have a risk management plan. Be able to stick to it, guys, or else you blow up, right? That's just all there is to it. Some people are learning that the very hard way. My goal is to bring traders from being boom bust traders to being consistently profitable traders. And I've been very successful in doing that in the 4 or 5 years I've been coaching now individual traders. I've been bringing my 20 years of both hedge fund and individual trading experience to the table to help them sort through all the mist of and the difficulty of finding a good trade and executing a good trade. So let's jump into it. So a couple of things. When we started off the day, every day we start off with the same concepts and the same ideas. And the root of the decision-making process actually comes from something called a market profile, right? So that market profile looks like this coming in today. Without going into a big in-depth conversation, let me see if I can find it hiding here. I know I have it somewhere. That was probably right here. There we are. I have it hidden right over here. And we look at the TPO. So the first question is, why is this an important chart? This is an important chart because I mentioned to members in the room, what this tells me is, okay, so I want to make this brief because I'm tired. Each of these areas are neighborhoods. See this? Neighborhood, 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 neighborhood. It's called value area. I call it the neighborhood because I'm ADD and dyslexic. I have a hard time learning. I've got to simplify things to understand them. The most basic concept that you can learn from this is, if you are not above the neighborhood, right, it is generally hard for the market to extend to the upside and easier to extend to the downside. You're talking from one day to the next, prior day's area. It's not an automatic. It doesn't mean that the market will only go down. It doesn't mean that the market can't go up. It just gives you an idea of which way, if you get a good location for your trade, which way you can press. Okay, so there's a lot more to a market profile than just these basics. But that's the beginning, or that's the gist or the beginning of the concept. And this is not ES. So let's go find ES here real quick. NQ. Here we're discussing NQ. We'll just go with NQ. Let's do this here real quick. You see how my chart marked up, but it's the exact same concept here, guys, right? So you will notice just a general concept. When we are below the prior day's value area or neighborhood, it is easier for the market to push down. So number one clue for today, first clue, right, was that we opened above the neighborhood, right? Clue number two, we had a naked point of control above. That's this right here. This volume, that's the volume point of control, and this is what's called a market profile point of control. One's based on time, one's based on volume. They're both become prime targets to the upside. And when you achieve that target, generally speaking, the auction is considered complete. So you're looking for reasons to get short in those areas. Okay. And then if we cannot get back above this, now we become a ping pong between this location, right, in here, is the idea. What we would have to do to break out is we'd have to get above here, consolidate, and then push higher. And guess where the next place we're likely to push? Right there. And then we go through the whole process over again. Will we find rejection up here, or rejecting, come back in and test the 66.44, right? So tomorrow morning, so to carry the concept over, tomorrow morning, right, when I come and look, this is my neighborhood. And the first question I'm going to ask on the day is, I'm trading below or above. Right now I'm at 65.55. I know that this is my overhead. That's not what I want to draw. I know that this is my overhead resistance. So that was the concept, right? So next, and I'm not going to bring market delta in, even though I use it because it'll overcomplicate this conversation. So the next part of this conversation is, well, how did you figure out where you wanted to trade? So this That's tomorrow's chart. No, excuse me, that's tomorrow's chart. This is today's chart. And this is ES. And we could do it with ES, but we'll do it with NQ. Just the same. It worked the same on both markets. So number one thing you will notice on NQ today was that, and let me unmark this chart. So first of all, you'll notice we opened up and we could not test into the value area and we started trending up. One of the things you'll hear me constantly say is get below your last best buyer if you want to short so you don't get run over. Same thing for longs. Get above your last best seller and wait to test back into them. That's not a magic bullet. It doesn't keep you from losing money. And you'll forgive me if I'm not overly exuberant. I'm very exuberant about trading. I'm very passionate about helping people not lose money. But one of the things that I am very insistent on is that I don't want to get, I'm tired, so forgive me. I don't want to get caught up in chop, right? So if you look at the open, this is called open auction, right? So what happened? We opened above value. That's your neighborhood. That's down here, right? But within range. Range is inside the prior day. So what did the market do? We met resistance. We started chopping back and forth in a very wide range. This is important, NQ, because the range here is about 66.70 all the way back down to 66.20. This is 50 points of range. It's $1,000 a contract. You can't afford to screw that up. That's a 5-minute bar, right? But if you look at our basic concepts, they worked, right? So let's discuss that, and let me show that to you so you understand the basic concept of trading from a scalping perspective and from an intraday perspective. So we open up, right? And if you look at the beginning of the day, this is my first bar. So I have to get above the high, or I have to get below the low of that first 5-minute bar. That's really important. That's 65.55 to 65.23. So what you'll notice is we finally we can't close below that bar, right? And we can't close above that bar. You'll notice right here we close above, we backside test, and then we push where? Into Tuesday's high. And then we come all the way back and we retest, right? Right at 9:30, we retest the first 5-minute high. That's fine. What you got to realize is what's important here are the white zones in this trade. So this area above, right, I expect the market to push out here. I know, I just drew those lines. Forgive me. I was like, I didn't have a white zone there to begin the day. I know I'm tired. I'm going to lift this. There we go. So 5-minute high and low. Let's see if we can square this off right here. I know I got to get above and below that area. Okay. We get above. We backside test, we push. So what are the qualities here? So you got to think through it as a trader, what you're looking at and what you're understanding. We were unable to get below the first 5-minute low. That's bullish. We were able to get above. That's even more bullish. We were able to rotate back. There's some simple tricks you can use to help set this trade up, right? So this is a rotation back to the 50-60. This is the first thing that tells you we might be trending up, right? We then get above Tuesday's high, test back to the 50-60, close above Tuesday's high the second time. Everyone who was short gets squeezed up. And then see this whole area, the 66.92 to 67.14. It's a wide area, but this is the area that I had, that I was looking for shorts. So now let's take a step back. I was short from 66.99 today. That was the area I shorted. I posted it accidentally on my public Twitter stream. Definitely had it posted in the private Twitter stream. And you'll see I laid that out very clearly. Here, I'll find it really fast for you. This is the Twitter stream. And you'll see that I put in, let's see, right here. See if I can. There you go. I put short 66.99 against 66.20 not filled yet. And if you'll look, I believe this is probably on California time, so that was 8:33, 10:33 a.m. So I'm posting this trade. Why do I want to show you that? Because I'm posting this trade right here. Okay, so look at what I have when I'm going through my processing, right? First of all, I've gotten to an area that I identified from the zones I post to the members, right? This is a key critical area. And what's the next thing I want to do? I want to get underneath my last best buyer. That's this guy right here. right? And I accomplished that over here, but really, I really want to get underneath them. So really, I would say that gets accomplished over here. Next, I come back up for a backside test right over here, which is why I want to short 66.99, right? And then what you'll see here is that I put, and then I moved it to 96. I moved it to 96 in the room. I didn't change it just in real time, right? But I said, you'll see right here. So this is just a little while longer, right? So you see this is 25 minutes later. So to trade at 66.96, you now have 20 points in the trade. So we've already swung down. I'm swinging this, and it can come all the way back. And then look, this is at this time of day, right? So we're right here to right here. That's right here. And so we get the 20 points right in here, and I say, I am targeting the low of the day. Well, why am I doing that? Okay, well, number one, I've come in and completed the auction up. I know that because I've hit my naked point of control. Number two, I've exhausted underneath my last best seller, right? Number three, I have a huge stretch off the lows. I've backside tested, and what do I need to do next? So next, I'm trying to get underneath Tuesday's high, right? Once you're trapped back in, you usually expect a trade to the other end of the range, which is why this 60, I think my original target was 65.92. I didn't quite hold out that long. My best scale was 66.10, although I obviously should have held the target, right? And that's how that trade got set up, right? So not all trades work perfectly. My read isn't always correct, but I know that when I'm trading up in this area, to switch back to this chart, right? I know that I'm in a area where the market is going to have this area up here because I'm looking at this chart right over, wow, if I can find this. There we are. So I know from my biggest picture, right? Notice how I'm stacking time frames. I know from this picture here, as I push up into this area, what this area specifically tells me is that the market spent, can't draw off another computer. There you go. The market spent an awful lot of time sitting here, right? So what does that mean when the market spends a lot of time? Think about that. So, and forgive me, I'm a little bit tired. I'm going to wrap it up. What that means is people invested a lot of emotional energy and a lot of financial energy into trying to make the market go up here, right? So who lost? That's the question you want to ask. The buyers lost there, right? There was a battle going on. There's always an equal number of buyers and sellers, but they put a lot of energy and a lot of time negotiating that price. So when we get up to this price, people are kind of going to, everyone who's trapped over here who went long is kind of going to go, hey, I want like my refund over here, right? So knowing that they want the refund, what I'm asking is, okay, give me evidence of that refund. Okay, the evidence of the refund comes in. Notice when we push up here, this is the biggest down bar, right? I then get underneath that biggest down bar. I can then test back on the backside of that down bar. And now I don't know that it's going lower there, right? So that's why I would have written you're up 20 points. My target is the low of the day and below, right? What I'm writing there is like, hey, the seller showed up. I believe that they will make an effort to take profits from that area. And now I have my entry, exit, stop, 67.20. I even gave it a little bit of room behind the high just in case it needed it, right? And I said, I think we'll roll over from here. So I had to use my knowledge of the day time frame, the intraday time frame, and the price action that's set up to let me go, okay, now I have a place where I can take risk. This is important because you never know which trade's going to work. You want to make sure that A, you have the right risk reward, B, you're taking your trades in series, and C, you're not trying to make every trade work perfectly. Okay. So anyways, that's my 2 cents. That's how I set the trade up in real time. It really just kind of laid up very, very nicely. And then I had to have the patience and understanding that we could sweep through that area to really have a big home run trade. If you'd like to join us in the room, send me an email to tradeandperform, tradenperform@gmail.com. I'm happy to extend you a 5-day pass into the room. I don't have anything else to add to that. That's ES set up very similarly. I think this market is exceptionally hard. It's nice to hit the home run trades, but I would really slow down your thinking and your processing so that you can understand the multiple time frames that are going on here. And my biggest suggestion is if you have a small trading account, really understand that it's hard right now, right? And that this will pass. I do think volatility will stay higher than it's been, right? And I do think we will have two-sided markets. And what that means is you're going to have to allow for stretches on both ends of the range, and that you should expect big counter rotations, right? So if you've gotten used to the market going one way and just buying every little dip, you already know you're getting killed, right? There's no shock in that. But if you will understand that there's a range and there's structure to the market, and that support resistance areas will hold, and let that stretch come out and identify how people panic. This is old school trading versus what we've had the last 5 years. That P&L will show up, and those big trades will show up for you, and you can make a lot of money. Anyways, I'm tired. I'm going to bed. Back at it tomorrow morning. Have a great night, guys. If you liked it, if you please hit the like button. I thought that was a pretty important setup, and it's one that I'll be looking for again tomorrow. So have a great night. Talk to y'all soon.